Hello and welcome to Pro Trader Strategies Market Commentary for Friday, February the 17th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. So having that out of the way, let's get this on. Not a whole lot of economic data today. As a matter of fact, the only thing we really got was retail sales out of Great Britain, and they came in slightly lower than expected at 0.3%. What's expected to be an increase of 1%, I should say. Then here in the United States, we got the CB leading index, came in right in line with expectations. It's not even a data point that anybody really even looks at, so let's just move on. We got the overall markets right now with crude oil slightly down on the day, about 27 points. Yesterday it was pretty much a full-on rally, and then gapped open higher yesterday afternoon and has since just slowly started trickling down. So once it got above that value area high, it really kind of caused the market to kind of gap. And now it's kind of retracing and filling in that gap as we speak. But crude oil slightly down on the day. We've got right now gold futures down also. We've got a real mixed bag today. We've got crude oil down. We've got the equities mixed. We've got gold down after yesterday's big rally. And then we also have the bonds up on the day. But we got gold futures right now just off by about $2 above that 200-day value area high. I talked about this yesterday. See, this is going to be acting as the resistance right here at around 1250-ish, 1248 should be the resistance area. That's kind of coming to fruition right now. As we kind of near that, it really starts getting repelled. So right now, that line in the sand holding pretty strong. Then on to the bonds. Up almost a point right now. They were up a point earlier today to go up and test that 50-day moving average, which has consistently acted as a resistance area for these bulls to get through. But the bonds up today, despite the fact that some equities are up and we've got a real mixed bag, could be starting to look like a topping pattern in some of these stocks like the Dow Jones, or some of these indices like the Dow Jones Industrial Average, down off by about 66 points on the day. But if you look at yesterday's settlement, we did have a historical high settlement in the Dow Jones. But when we start zooming in on this chart here, you can see that this topping pattern, this doji, is really looking pretty bearish. So could just be a intraday type situation. But if we settle down below where yesterday's low was, that could really start indicating a top, especially if it settles down here at around 20,500. So keep that in mind. If we settle anywhere below that 20,500, it's definitely looking pretty bearish. Then on to the NASDAQ. NASDAQ being up on the day as the Dow Jones and E-mini S&Ps are down. NASDAQ is up on the day. Sorry if I said down there, but up slightly on the day by about 5 points. But yesterday also looking like a bit of a topping pattern. Today has not confirmed that, but NASDAQ, the only indice as of right now that's up on the day. We got the E-mini S&Ps off by 5 points, inverse of what we saw there in the NASDAQ. But again, we're seeing this little doji here at the top for the E-mini S&Ps, and that is a hangman doji, starting to look more of a top. So again, bit of a confirmation today. It would look more likely, or more of a topping pattern would be confirmed if we settle down below 2335. So anything below that is going to look like a confirmation for the most part. This is the breakdown of the E-mini S&Ps. Pretty much just slid off from the open of the overnight session, and we're right in the middle of that overall range. So overall market's pretty quiet today without the economic data. It's being a Friday, not a whole lot going on as of right now, which is expected middle of the day on a Friday. We'll probably see more action, especially towards the end of the day. Qualcomm, this is a trade that I did for the butterfly segment that we're still in the process of getting ready to wrap it up. This didn't work out. It was looking pretty good for a while there. But in Qualcomm, what I had done was the February 50, 52.5, 55 call butterfly in there. So with that, I originally paid a debit of 77 cents for that trade. Was looking for it to really settle down into a tight range there. Ended up having to cover it for 0 today. It was all of my strikes are in the money, so I had to get out of that. I can't just let it expire worthless, so had to be a little bit diligent. Held on to that for a little bit longer. As you can see, that rally was working out pretty good, but then we got that rally. Was just hoping that we could get a bit of a pullback to come into the sweet spot, or at least my break-even area. Just hasn't happened, so had to cover that one for a loss. Then on to Costco. Costco is another trade that I had done a long put spread in there. It was the February 150, 170 put spread in there, so I was pretty bearish in that one. It's trading up around 175, so those options are going to expire worthless there. And then on to YHOO is another one that I'm going to let expire worthless. As a matter of fact, it's outside of my range as well. So I had on the February 42.44 put spread. It was a long put spread there. Paid about 50 cents for that one. It's just a little over 50 cents for that one. It's going to expire worthless as well. So those two trades are going to roll out. Halliburton, this is one that I'm actually trying to get out of right now for right around 50% of my max profit. Gotten the directional move that I want in there. It's in the March, and short the 55 puts and long the 57.5 puts. So as you can see, it's through my strike on the lower end on those 55 puts. So it is well outside of that range. So I should be able to get pretty close to it. If I get any more of a pullback here, I'm going to be able to get out of that. Originally paid $1.25 for that, so if I can get out for about $2, that's what I'm looking for, because that's around 50% of my max profit on that one. It being a $2.50 wide spread, that should be right in line with what my max profit potential is on that. So looking at about trying to get out a little bit better, but I'm going to kind of play that one by ear for today. Then Deere is the trade that I did for the earnings trade. So in this, I just decided to go in there and do a strangle around Deere. It allowed me, with the high volatility, to get well above where the all-time high on that stock is. And then I just figured if we're sitting a lot of robustness in the economy, we could easily see this gap up, or at least go up and test that high. But if I'm able to get outside of that, that was pretty good, and I wasn't really too worried about the downside in this. But with Deere, I did the February, so they expired today, which is great, because then I got all that volatility contraction, all of that theta decay coming out all at once, and did the February 103, 115 strangle in there. So the 103 puts, the 115 calls that I was short, originally sold that for 87 cents, was able to buy it back for 7 cents today. So that ended up being pretty nice. Could have gotten that one on a lot better middle of the day as theta started coming out of that rather quickly towards the end of the day. Probably lost about a nickel to a dime actually from the first time I really started looking at that, but ended up being a nice trade nonetheless. All right, that's about all I got for you guys today. Today's webinar is going to be on the broken wing call butterfly. So if you are concerned about the upside, this is a great strategy for a neutral to slightly bullish market sentiment. So we're going to be able to profit if the stock moves up and through our wing on the upside. So that's the beauty in this trade, is it's a higher probability trade. Although we are creating more risk to the downside, we are eliminating our risk to the upside, which butterflies usually have risk on both sides. With this kind of setup, we're going to embed a short call spread, or a put spread in there, and that's going to eliminate our risk to the upside. So go to protraderstrategies.com, sign up for that. If you can't get that, take it easy.